Is this the property boom that shouldn't be almost? Because that industry just had so many interruptions during the pandemic, and here it is now. It's extraordinary.
Yeah, that's right. If you think about, May, June, July last year, there was no shortage of people out there saying it's going to be a house price crash, 30, 40% falls. Of course, they were the usual suspect who also always predict house price crashes. So any set of circumstances will do. But there was a real concern. Even the big banks were out there with reasonably, negative, quite awful in some circumstances. Some saying I think it was 20% was the largest I saw from one of the major banks. That would have been really material. Of course, the economy didn't falter as badly or for as long as was possible. That recovery with low rates meant that we simply all felt like, or all of us, but most of us, we had more money in our pockets or the same amount of money in our pockets. Our jobs weren't at risk. And yet we could go to the bank manager and say, how much can I borrow? The bank manager was saying, well, about 25% more than you could this time last year. And unfortunately, for those people who are trying to get into the housing market now, plenty of people say, great, thank you very much. I'll take that higher borrowing capacity. I'll go and bid at auction against everybody else with the same circumstances. And that's why house prices are going through the roof, simply because it's more affordable at these lower rates.
Yeah, it's fascinating to see how it's playing out. Now, Scott, the ASX is expected to be buoyed by another rally in New York overnight.
We've seen some really strong share prices. We're talking about recoveries. Our market not yet at the February 19, 2020 highs. We're still chasing that down. But the American market hit those numbers, I think, before the end of the calendar year last year.